It's time for an investment Robo-Advisor Throwdown. We've got Betterment going against M1 Finance. These are two investment platform juggernauts going head to head. Which one is the best investment platform? We're gonna find out who the winner is right now. What's going on, GSC fam and Wealth Hacker Nation? It's your boy Jeff, and it is time to make your life more. Today we're going to do something. This is something that a lot of people have been asking me. What is the better option? Because there are tons of different investment platforms, investment apps, robo-advisors. Today, what I want to address is the two heavyweights in the room. In one corner, we have M1 Finance. In the other corner, we have Betterment. These two are going head to head today, and let's just go ahead and get right into it. Now, for those that may not be familiar with M1 Finance or Betterment, let me first address why am I comparing these two platforms? Now, there are, as I mentioned earlier, there are dozens of different investment platforms that exist out there. And the reason why I wanted to compare M1 Finance versus Betterment is because between the two of them, they are the two, I would say, the best investment platforms for beginners. So for those that are wanting to get started, don't know where to go, and they just don't trust themselves going into a brick and mortar brokerage firm, or they don't trust themselves going online, and they just don't know where to start. To me, M1 Finance and Betterment are the two that you want to look at. So that's why when I'm looking at M1 Finance or Betterment, that's why I'm comparing this two. So let's first start and address the size, when they've been started. So looking at Betterment. So Betterment, they were founded in 2008. So they have been around for quite some time. Now you compare that to 2015 is when M1 Finance was created. So Betterment has a 7-year head start on M1 Finance. And is that good, bad, or different? Not really. I mean, we could look at Yahoo was started before Google, and we kind of know what happened there, right? Now, account size, like this may be an issue if you're wanting a firm that is not just established, but also has a lot of assets under management. So as of right now, Betterment has around 33 billion, correct? 33 billion under management. Compare that to M1 Finance, and you're looking at 6 billion. So that's a pretty noticeable size. Almost 6 times the size of M1 Finance is Betterment. Compared on customer size, it's actually closer than you would think. Number of customers with Betterment is around 730,000. Compared that to about 500,000 with M1 Finance. Now, one of the main reasons why Betterment is so much bigger as far as asset size compared to M1 Finance is because they really got heavily involved in the 401k space. So though I don't know exactly how many 401k plans they have, but I do know working, in the financial service industry and actually looking into Betterment as a possible option with 401k providers for my clients at the time, I knew this was a part of their business. They put a lot of energy, a lot of resources in. So I don't know exactly if that's the reason, but that's what I have to guess why they have so many assets compared to M1 Finance, just because a lot of people have a bulk of their assets in their 401k plans. So now let's talk a little bit about fees, the difference between M1 Finance versus a Betterment. Now, if you look at M1 Finance, they'll say pretty proudly that they don't charge any fees. Automated commission-free investing, you'll see it right here on their website. Now, if you compare that to Betterment, Betterment does charge a fee. And I've talked about this in other podcasts, also on the blog if you want to check this out. But with Betterment, they do charge a fee, but compared to what other platforms are charging, it's not a lot at all. So for example, you can set up a no-fee checking account, not really get any investment there, so we won't talk much about that. But if you're looking at their basic plan is 0.25%. So 0.25% is what you are paying for them to manage your portfolio. You want to compare that to M1 Finance, where there is 0 fees. Now, you're probably wondering, and I would be as well, because anytime you hear no fees, is that legit? Is that, are there really no fees? You just can't see them. So technically speaking, yes, M1 Finance is not charging you to buy and sell any stocks or ETFs inside their platform. Now, the way that they do make money, yes, they have other products and services they can charge a fee on, and that's more like on their banking product. Also, they have a loan product they can charge you. They have a debit card, a spend card, like we'll talk about it here in a second, where they can charge you an annual fee there. But the other thing is like when they, as a clearing firm, meaning that like anytime you're entering trades through them, they have to go through some sort of not brokerage, but they have to go to somewhere to execute those trades, which are called market makers. And if they're bringing large blocks of trades to them, there is some sort of, I don't say kickback, that might sound illegal, or but basically just like, hey, listen, we're gonna bring a ton of business to you. Is there any sort of discount that we can get, which then they could pass on? I guess technically they could pass it on to the investor, or they could pocket some of that. Now, that is just another way that they can make a little bit of money. Is that bad, good? I mean, to me, it's still good. I mean, you could still go to any other like Ally Invest, or I'm thinking some of like the legacy, like TD Ameritrade, some of these older online brokerage firms where even if they're charging you like $5 or $10 to buy or sell an ETF, if you're getting those for free through M1 Finance and you're not really interested in day trading, which none of these platforms, whether it be Betterment or M1 Finance, is good for day trading, then it really isn't a big deal. Now, if you're trying to like execute trades and trying to get the exact price, whatever it is, like right now on the second, that's not going to be for you. And I definitely wouldn't suggest either M1 or Betterment as an investment option for you. All right, so let's now talk about account types. What account types can you open up at M1 Finance versus Betterment? Is there pros and cons of each? First, let's start with M1 Finance. With M1 Finance, you can open up your traditional individual account, individual brokerage account, a joint account. They also do traditional Roth, SEP IRAs, trust accounts, and also custodial accounts. Now, for me personally, I love the fact that they do trust accounts, and that's because I have a self-directed 401k, and the way that my 401k is set up, it is basically a 401k trust account. So I was able to set up a 401k, a self-directed 401k at M1 Finance. I tried to do that a few other places and it just wasn't an option. So the fact that I could do that here, I mean, that was pretty sweet. How does that compare to Betterment? Betterment, very similar. They could do Roth IRAs, traditional IRAs, SEP IRAs, inherited IRAs, individual tax accounts, joint tax accounts, also trust accounts. Now, the one thing that they don't do, and this could be a deal breaker for you, is that they don't do custodial accounts or minor accounts. So basically, if you're trying to set up an investment account for a child, that isn't an option here. It also says they don't do solo 401k plans, self-directed accounts. So they don't do that, which is, and we'll get to the reason why. Like you can set up a 401k with them, that's through the business. Here you can't do self-directed. So once again, that could be a deal breaker. I know for me, I personally wasn't interested in the investment options at Betterment. That's where I preferred M1 Finance. So that wasn't the main issue, but the fact that, like I said, I could open up a self-directed 401k, essentially a trust account at M1 Finance, that was awesome. I don't have any custodial accounts at M1. I've set those up somewhere else just because I'm trying to teach my kids how to invest, how to buy stocks. M1 Finance could be an option, but I decided on another option for right now. All right, so now let's really talk about what makes M1 Finance different than Betterment and why one may be the other, like as far as like a deal breaker. Now with Betterment, let me just go ahead and start there. With Betterment, one of the things that makes them interesting or attractive is that you don't have to pick any of your own investments. So how Betterment works is whenever you set up an account, you log in, you basically choose your goals, like what are you trying to accomplish, what's your timeline, are you saving for retirement, trying to buy a house, like whatever that is, like whatever that may be, you identify what your goals are. And once you identify your goals, Betterment then will help you choose your investment portfolio, which basically is an ETF portfolio. There are no individual stocks, there are no mutual funds. It's all ETF driven. And that may be good because maybe you don't want to deal with having to choose anything or build a portfolio. Like if you want an expert, in this case, it would be Betterment, to do that for you, then that's what you're paying that 0.25% for. So that's how Betterment works. Now, if you compare that to M1 Finance, M1 Finance is a little bit different in the sense that you can pick individual stocks. You can pick ETFs. They don't do mutual funds. You can also do fractional shares of individual stocks, which is, for those that, if you don't know what fractional share is, like if you're trying to buy, say, a share of Tesla and it's $1,000 and you only have $100 to invest, well, you can buy Tesla, you just can't buy a full share. You're just going to buy a fractional share, like whatever dollar amount that you have. So that is a big win for a lot of people. And that's where that whole commission free comes in, where you're not paying anything to make these trades if you are building your own portfolios of stocks or ETFs. So that's why when I mentioned earlier about with Betterment not offering the self-directed 401k, that's because you don't choose any stocks. You don't choose any investments. Like they are choosing your portfolio on your behalf. And that it can be totally fine. Like if that's what you want, if that's what your desire is, like you just want to open an account, investment account, and just get going, get invested with the least amount of friction possible, like that's where Betterment comes in. But if you want to be more in control of what you're picking, what you're choosing, and you want to build your own portfolio, like that's where M1 Finance comes in. Now, but here's the other kicker with M1 Finance. So what they call their investment portfolios, they call them pies, because like, you're building your own pie. Think of like a pizza, all your different slices, and you can build your own pie, but they also have their expert pies or community driven pies. These are, and I'll read it here from their website so you can basically just read it direct here. It says, we have put together 60 curated pies for a variety of investment styles or goals, from responsible investing to dividend earners to cannabis companies and so much more. And they just kind of break down like all the different pies that you have. And so basically, if you think about, I know this isn't like an exact apples to apples comparison, but the way that I kind of wrap my head around this is that if Betterment is building these pies for you, and because that's what you want, that's your comfort zone, like that's so that you don't have to like do anything, right? So they have like their own portfolios. Well, with M1 Finance, essentially, that's what these expert pies are. Like they're to me, it's like the same thing. It's a pie that's already built. You don't have to choose anything. You don't have to build anything. So that is one option. Another thing they also have is these community pies. So basically that means that if there is an investor that you follow, maybe it's a YouTuber, a podcaster, a blogger, and they've built their own portfolio at M1 Finance, they built their own pie. If they share that, you can make it shareable. So then you can actually click on their pie. And if you want to buy it exactly how they have it, you can do so. That's something that I've considered doing. I still haven't done it yet, but it is an option. So that's another thing. And the cool thing is like you can buy that pie, but maybe there's something about that pie that you don't like. There's a holding, a stock, or maybe it's the weight, what percentage of a stock, and you want to tweak it. You can buy that pie and then you can tweak it and make it how you want it. So I just love like anytime I go out to eat with my family, if we're going to a pizza place, like I'm a meat lovers guy. I love meat lovers. My wife, she kind of changes every once in a while. Sometimes it's Hawaiian, sometimes it's something with black olives, which I just cannot stand black olives. So anytime like you're ordering a pizza, a pie, and if you want to tweak it where like half of it's black olives, half of it's meat lovers, like you can do that, right? So that's what I think about with M1 Finance. You can customize a pie any way that you want till it finally gets to how you want it exactly. And I think that's just the power of customization. But also if you don't feel comfortable, building or customizing that pie, you can just lean on their expertise, some of the pies that they have already built on their own. Now, one thing I want to address before I move on to the next topic, talking about the fees associated with investing. And we talked about how Betterment charges you 0.25%, how M1 Finance doesn't charge you anything. Now, there is a fee if you are buying ETFs or exchange traded funds. Now, Betterment, that's all they use is ETFs. Now, with ETFs, the internal expense, the internal fee is much lower. You can think somewhere in that 0.05%. It could be a little bit more if it's an international ETF. So that is not anything that Betterment is getting paid. That's basically whether it be Vanguard or iShares, whatever the ETF company that they are using for your portfolio. So those are fees that you are paying that you aren't seeing. Now with M1 Finance, if you're buying ETFs, same story, you still have that internal fee. But if you're buying stocks, there is no internal expense for the stock. So just wanted to address that, making sure that you understood that there are some fees that you're not going to see, but in comparison, they're still relatively cheap. ETFs are meant to be one of the lowest cost investment options that exist out there for any type of investor. Now, the last part I want to talk about, and this, to me at least, it's not that big of a deal, because when I think of an M1 Finance or a Betterment, I'm opening an account because I'm wanting to invest. Like that is my pure goal. I will say that all these different investment platforms now are offering other products and services like a bank, like a financial institution, because they want more of your money. I mean, it makes sense. So they do have these additional features. M1 Finance has their M1 Spend. So this is a checking and also a credit if you so want. And it is very attractive, like 1% cash back, 1% API. You have access to like ATM machines that will give you, I think, one free reimbursement each month. You got the FDIC insurance. There is a fee, $125 annually that you'll pay. But the other interesting thing with this is that if you're paying $125 a year, and if you're getting 1% cash back on your checking, on your cash, I mean, if you do the math, if you've got a lot of money sitting in cash and you transfer that over and you're making 1% on your savings, I mean, you could end up making a lot more. I know, like with my checking right now, they're paying checking and savings, they're paying 0.01%. So like, I mean, doing the math, and how much we have sitting in our checking right now, like it would be advantageous to transfer that over. Now that's M1 Finance. Betterment, they call their hassle-free, no-fee checking. And it's very similar. They have the ATM. With theirs, like there is no fee. Because why no fee with theirs is because, well, they are charging you the 0.25% to manage the rest of your portfolio. So, I mean, that's kind of how that works. This might be a big deal to you. I mean, to me, I haven't got to the point yet where I'm comfortable with this. I know that it seems like the younger generation that is starting with all their investing and savings and using their phone, using apps, like this is becoming much easier. And it just seems more, when I say my kids, right? Like my oldest son, he's a sophomore right now in high school. And if it wasn't for us, he probably wouldn't even have a banking account, but he pays like all his friends, they do Venmo, they do Cash App. So this is something probably more geared, and this is where it's going. I just haven't got there quite yet. So these are the options that are available to you, whether you do M1 or Betterment. I don't know if I have a preference one or the other. I mean, I will say that this M1 Finance card, I mean, it's partnered with Visa. I mean, it looks legit. So I do like that sense, but that's not the reason I'm going to pick one or the other. To me, I'm looking at what are the investment options, what are those fees, and that's what I'm looking at. And that's why, I lean more towards M1 Finance. I just like the idea of having access to individual stocks, having access to more ETFs, and just having more control in choosing my investments. But with Betterment, for those that don't want that control, they don't want that responsibility of having to choose individual stocks, choosing ETFs, and building that portfolio, I mean, I could totally see why Betterment would be a good fit. So for me, if I had to choose one, I would choose M1 Finance. I mean, choose one, M1. That should be like their logo or slogan, right? But yeah, that's who I would choose. I love I can repeat it. I'll be quick. Control. Control, having control in choosing the investments, building my own portfolios, but also if I want access to experts that have already built their pies for me, then I can do a little bit of both, and that's kind of the cool thing. You can build as many slices as you want in your M1 Finance account. So that's the other attractive feature. So yeah, for me, I'm choosing M1. Doesn't mean that Betterment is bad. If you don't want control, Betterment is a good option. If you want a little bit more control, take a look at M1 Finance, and that's who I'm going to pick. So hope this was helpful doing a showdown review, M1 Finance versus Betterment. If there are any other investment platforms or any sort of investment apps that you want me to take a look at and kind of compare the pros and cons of each, let me know. Hit me up on the contact form at goodfinancialcents.com/ask. You can also submit any questions that you have for the Good Financial Sense podcast that I may answer on a future podcast and also YouTube video. All right, y'all. Hope you enjoyed this episode. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until then, peace.